Julio Bonillo, munis have been in the spotlight due to Puerto Rico's problems. Would you care to weigh in on the situation and what it means for the overall muni market?
Absolutely. You know, when you look at Puerto Rico, you have to remember that Puerto Rico's issues are Puerto Rico's issues. It's not systemic. It's not a problem that we're seeing across the entire municipal landscape. Puerto Rico's issues have been developing over decades, and it's a problem that's going to stay within Puerto Rico. But that being said, we're very cautious of how the retail investor will react to that Puerto Rico news and whatever the outcome may be. And it's really difficult to figure out what the final outcome will be. But what we do watch and what we are mindful of is how will that retail investor react. If they react negatively, start to pull money out of their municipal bond funds, from our perspective, that's an opportunity to get into the muni space. If they don't overreact, which is what we've seen, that's great.
Well, people say that Puerto Rico is just a small fraction of the market and can be contained, but we're hearing problems about Chicago. That's been downgraded. That's a major U.S. city, and even the whole state of Illinois is problematic. So what are you doing there? What are you hearing there?
You know, that's a great question. And the reason that we like Illinois and we like some of the Chicago names is because they still have thriving economies. And that's the big distinction between a Chicago and a Puerto Rico, or Illinois and Puerto Rico, is that you have thriving economies, you have industries there that are doing really well. Unlike Puerto Rico, where you actually have a brain drain, you have people who can provide great services within that economy, moving out and coming to the States. But Chicago is a great opportunity. Sure, you might have some names that are going to be distressed, they're going to get priced differently, but there are some great opportunities within the Chicago space. One name I can think of off the top of my head, Chicago Board of Ed. We like the legal structure, we like the way that you get protected as a bondholder, and from our perspective, that's a great opportunity.
So in general, do you know where the landmines are? Because we keep seeing things pop up in the muni market. You know, Detroit, Stockton, California, and now we see Puerto Rico and Chicago. Do you know where the landmines are?
We do, and that's, I think, the key of having a good credit team at your home base. What we are looking for is those distressed issuers that are the smaller local municipal issuers that have rather large pension obligations, rather large retirement pension obligations, that just really are overwhelming for these small municipal issuers that don't quite have the same levers that they can pull that the states might have. You have to remember that whenever the states run into problems, they tend to cram those problems down to the local level, and those issuers are the ones that struggle. So we really are trying to stay away from those local geo issuers that have incredibly overwhelming positions in pension obligations.
All right, let's talk about issuance, because that is also a driver of muni performance. Have you seen a lot of new issues coming to market before rates rise?
We have. We've seen a tremendous amount of refunding in the muni space. And really, when you think about it, you have to think about it in terms of the net supply of munis. How many bonds are maturing out of the marketplace and how many bonds are being brought into the marketplace? And when you think about refundings, really what they're doing is they're just taking out old bonds and replacing them with new bonds. Net doesn't create new bonds in the marketplace. From our estimates for 2015, we actually expect the marketplace to increase by a very small amount, about $25 billion. It's not that significant for the marketplace, and we think that that's probably why the muni market has done pretty well so far this year.
All right, and then finally, can you give me a sense of valuation? One thing I consistently hear from muni managers is that they're cheap compared to treasuries. Do you want to agree with that statement?
We still think there's some value versus treasuries, not as much as the last time I spoke to you, but there's still a little value versus treasuries. And I think in particular, we really like that 5 to 12-year type maturity range. That's where we're finding a significant amount of value given the current interest rate environment that we're in.
All right, thanks a lot, Julio.
Thank you.
And thank you for watching The Street.